It's Sunday night, January 12th, 2026, and I'm witnessing something in the silver market that I've never seen before in over 12 years of tracking it. The financial media still stuck on their usual headlines: green, red, tech stocks, market resilience. But here's the thing they're not telling you. While you were busy with the weekend's game, Jerome Powell, the chairman of the Federal Reserve, just got hit with a criminal investigation by the Department of Justice. The man who controls the money printer, under fire. And you know what's even crazier? In just 48 hours, something shifted in the silver market that should have been front-page news. The price of American silver eagles, the benchmark 1-O's coin, just crossed $100 at major dealers. Not spot price, $100 to actually hold it in your hand. That's not a typo, not a fluke. That's the new floor for physical silver. But the media? They're playing it down, calling this a minor event. Yet what just happened is a huge red flag. The physical silver market just made a move that the paper markets can't ignore, and the Fed, they just opened Pandora's box. What's inside is something they're not going to like. Now let's break down what just happened. Silver breaking the $100 mark, that's just the surface. But the real question is, why is nobody talking about it? You see, this isn't an isolated spike. This is part of something much bigger. The story isn't just about silver hitting a new high. It's about the panic behind the move, the loss of trust in the system, and a market that's decoupling from everything we thought we knew. While mainstream news points to a volatile market or throws out phrases like market resilience, the truth is far darker. The $100 price on physical silver isn't a reaction to silver itself. It's a response to a crisis sparked by a loss of trust in the institutions that control the markets. Jerome Powell, the Federal Reserve Chairman, is now under investigation by the Department of Justice, and it's shaking the very foundation of the financial world. So, why is this happening now? And more importantly, why aren't we hearing the full story? Because what you're seeing in silver is just the beginning. The real question is, what happens when people realize they can't trust the very institutions that are supposed to protect their wealth? And what happens when the markets, both physical and paper, finally break apart? Here's where it gets real. The silver market just called the Fed's bluff. And it did so in the most unexpected way. You've probably seen the numbers. Spot silver is sitting at $85.55, but the price to actually buy physical silver, over $100. That's a premium of 17.5%. In a normal market, that's unheard of. A normal premium is $3, maybe $5 if there's tight supply, but 17.5%, that's a massive gap. But let's pause and think about this. Why is the physical price so much higher than the paper price? Simple, supply and demand. People are scrambling to buy anything they can get their hands on, and dealers are running out of stock. The supply of physical silver is drying up, and that's exactly what's causing the premium to spike. But here's the key, the paper market. Those futures contracts, those bets on silver's future price, are controlled by institutions that don't want this to happen. Notice what's missing here. No one's talking about the real reason this is happening. This isn't just a market fluctuation. This is a decoupling of paper silver and physical silver. The institutions want to keep the price low, but the physical market has already spoken. The real price of silver, it's $100 and it's going higher. This is where things get dangerous. What we're seeing now isn't just a simple price spike. It's a full-on breakdown. The physical silver market has decoupled from the paper market, and that's not something that happens overnight. This kind of market reaction, it's not typical, and it's not going to stop here. Historically, when something like this happens, we see the system scramble. The last time we saw silver experience something like this was in 1980 with the Hunt brothers. They tried to corner the market, and the exchanges changed the rules to force them to liquidate. What's happening now? It's not just retail demand driving the price. This is institutional panic. When big players realize they can't get their hands on silver at the paper price, they start bidding up the physical market. And that's exactly what we're seeing now. Here's the bigger issue. This should not be normal. This isn't a small blip or a minor hiccup in the system. This is the start of something bigger. If this decoupling continues, we're looking at a situation where the paper price will no longer reflect reality. The physical price will keep climbing, and the institutions will have no choice but to intervene. And when they do, it's going to get ugly. This is where the pressure really starts to build. The gap between paper silver and physical silver isn't just wide, it's massive, and it's getting worse. Over the weekend, I checked prices across major dealers. You know what I found? The American Silver Eagles, those coins everyone tracks, are listed at over $100 at every single major dealer in the U.S. Not a fluke, not a one-time spike. $100 is now the floor for physical silver. And this isn't a one-off event. This is a systemic breakdown. But here's the kicker. The spot price, still hovering around $85.55. That's a huge discrepancy. Dealers are charging a 17.5% premium, and yet despite that, the demand for physical silver is skyrocketing. That's not normal. This is panic buying. People aren't just investing in silver. They're buying it as a hedge against something much bigger. They're buying it because they've lost faith in the very system that's supposed to protect their wealth. Now, here's where this flips. As more people realize what's happening, the gap between paper and physical will only widen. And once that happens, we're no longer talking about just silver. This becomes a crisis in the financial system. The market will no longer be able to hide the truth, and the institutions holding the paper contracts will be forced to either pay up or default. And if that happens, this market will explode in ways we haven't even begun to imagine. Things are moving fast now, and the pressure is stacking up. First, we had the DOJ's criminal investigation into Jerome Powell, shaking the Fed's credibility. Then we saw the decoupling of the physical silver market from the paper market. Now we're seeing dealers scrambling to meet demand, with silver premiums hitting an all-time high. The retail demand is off the charts, and they can't restock fast enough. It's clear something is breaking, and it's happening right before our eyes. Let's stack a few more developments on top of that. We've heard whispers about an LBMA short squeeze, with rumors of a major player, possibly a central bank or sovereign wealth fund, trying to order a massive amount of silver, but the vaults can't deliver. If that's true, this is the perfect storm. A massive delivery default would send shockwaves through the system, and the price of physical silver could surge even further. This isn't just a silver problem. It's a systemic issue that could cause a complete collapse in trust across the markets. And if that wasn't enough, we're now hearing that financial institutions are rotating into metals. Morgan Stanley has advised its clients to buy silver as a fiscal risk hedge. When the big players, who usually avoid silver, start pushing their clients to buy in, you know things are about to get real. What happens if this continues? It's simple. The chaos will only spread, and it won't be long before the paper market completely loses control. Now, let's take a step back and look at the bigger picture. This isn't just about numbers or charts. This is about real people. And when you start to think about it, this is you. When the price of silver spikes, when premiums surge, it's not just the Wall Street elite who feel it. It's the middle class, you, who are scrambling to secure their savings. And it's not just a few savvy investors. This is becoming a mass movement. People are flocking to silver because they see the writing on the wall. They understand the risks. But here's the hard truth. Most people are unprepared. While the rich can hedge their bets, it's the everyday person who is at risk of being priced out. Imagine going to your local coin shop and seeing a $100 coin, only to find out the premium is now $120. You want silver, but it's becoming more and more expensive. And here's the problem. When the media starts telling people to stay calm, that's when it gets dangerous. Because when the panic really kicks in, when retail investors start flooding the market, it'll be too late to get in at reasonable prices. So ask yourself, what if this is already happening? What if right now the mass buying is happening behind the scenes? You might not feel it yet, but when the prices surge further, everyone will feel it. If this feels familiar, say so in the comments. Let's take a moment to step back from the noise and look at what's really driving this chaos. Because as much as this is about silver, it's actually about the system behind it. This whole decoupling, it's not just silver going crazy, it's the failure of trust in the system that underpins the market. The Fed was always seen as this untouchable institution, but with Powell now under criminal investigation, everything is coming undone. The credibility of the Federal Reserve, once the cornerstone of financial stability, is suddenly in question, and that changes everything. Why does this matter? Because when trust in the system breaks down, people flee into hard assets, gold, silver, real estate, anything that feels real. It's a flight to safety. And this isn't just a random panic, it's systemic. The incentive structure is all wrong. The central banks have been printing money with impunity, driving the value of the dollar into uncertainty. And when the value of money itself is uncertain, people turn to something they can hold, something that has real value. That's exactly what we're seeing in silver. It's no longer just about metal. It's a proxy for the collapse of trust in the system. And when trust is gone, price discovery goes wild, the market will react, and it will react violently. This is more than just a silver rally. This is a sign of something deeper, a collapse in the foundation that we all rely on. Now let's look ahead. Because this story is just beginning and the next moves are already in motion, we're standing at a crossroads with two very different paths ahead of us. On one hand, if the DOJ investigation fizzles out and the Fed somehow manages to regain control, we could see a temporary dip. Markets might calm down and silver could pull back, maybe down to $80 or $75. And the media will jump on it, telling you it's over. The silver rally was just retail hype, they'll say. But if you know what's happening beneath the surface, you'll understand that this isn't the end, just a temporary pause. But the other path, that's the one to watch. If this decoupling continues, if the institutional players start scrambling for silver to cover their bets, the price could soar. The $100 floor we're seeing now could become nothing compared to what's next. I'm talking 120, 130, and if things really escalate, we could see silver hitting $150 or more. And remember, this is happening while the paper markets are still lagging behind. You'll be paying premiums, huge premiums, for the silver that you can actually hold. The trajectory is uncertain, but the momentum is undeniable. This is a train that's already left the station. The question isn't whether it will stop, it's whether you'll be on board when it hits the next station. We're witnessing something that's more than just a silver rally. It's the breakdown of trust in the entire financial system. The Federal Reserve's power has been built on a perception of credibility and stability, but that illusion is crumbling fast. The DOJ investigation into Powell, it shattered the myth that the Fed is untouchable, and that's why we're seeing what we're seeing in silver. The premium gap is real, and $100 is just the beginning. But here's the deeper insight. The silver market is telling us that the system is broken. The paper price might still be $85, but the real price, it's already $100 and it's only going higher. The physical market has spoken, and it's making it clear that we can no longer trust the numbers on a screen. The real value is in what you can hold, what you can own in a world where the very foundations of the financial system are cracking. So what happens next? We're entering a period of unprecedented volatility, and if you're not paying attention, you could get left behind. But here's the key. This isn't about panic. It's about being ahead of the curve. If you've been listening to the signals, you're already on the right path. Stay informed, stay disciplined, and most importantly, don't let the noise distract you from the truth. If you want to keep up with the latest developments and insights, make sure to hit that follow button. There's more to this story, and you won't want to miss what's coming next.